SpaceX jumped 30.4%. Lab scores 61 out of 100. Buy. Reusable boosters now launch at just 30.4% of legacy costs, slashing expenses dramatically and trimming fuel burn by half. That cost compression fuels rapid satellite constellations and fuels today's rally. In the full teardown, we dissect how each reflight saves millions and why the market can't ignore it. SPCX just surged 28.8% because critical mineral demand is skyrocketing, proving space infrastructure is the ultimate hardware bottleneck. While Wall Street focuses on satellite counts, the real engineering constraint is payload mass fraction. SpaceX's Falcon 9 achieves a reusable payload mass fraction of over 4%, leaving Rocket Lab's Neutron struggling to match its launch economics. This massive structural advantage is powered by vertical integration. This engineering dominance directly drove today's 30.45% spike to $209.96. Quarterly financials showing modest revenue momentum for SpaceX. By Q3 2026, trade policy friction will compress SpaceX's operating margins by 150 basis points, while the normalizing yield spread of plus 0.39% signals a stabilizing economy. Macroeconomic headwinds are building. High interest rates of 3.63% increase borrowing costs from massive launchpad infrastructure. Simultaneously, strict export controls prevent SpaceX from monetizing its advanced propulsion hardware internationally. If trade war tariffs escalate over Greenland or China, supply chain costs will spike. These policy barriers act as a powerful friction, offsetting the tailwind of a low 7.4% recession risk. SPCX just printed a 28.8% intraday rip, and the press release reads like a Hollywood trailer. Management's headline: new risks emerge from time to time. Some risks are inherently unknown to us. That's not a risk factor. It's a Jedi mind trick. They want you to feel the thrill of the unknown, not the terror of unquantified exposure. The lab hears something else. Zero institutional ownership, not a single fund in the top 5. That's not a liquidity quirk, it's a credibility gap. R&D is now 46.3% of revenue, up 149.5% YOY. On paper, that's conviction. In reality, it's a burn rate with no guardrails. And while the PR team spins critical minerals demand, the engineering reality is that Starship's thermal protection system still sheds tiles like a cheap roof in a hurricane. The momentum breakdown for SpaceX. RSI sits at 50, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. The bull case rests on SpaceX's reusable booster technology, which slashes launch costs and allows rapid satellite deployment. But here's what breaks the bull thesis. High interest rates increase infrastructure borrowing costs, and strict export controls limit international engine sales. Our technical setup shows a bearish MACD, which signals near-term downward pressure. If SpaceX completes its next-generation orbital test by Q4 2026, expect the stock to breach resistance at $220.46. If regulatory delays freeze launches, the price will plunge to support at $199.46. Based on our AI score of 61, we expect the successful launch path to prevail. Here's the macro picture shaping SpaceX. High Federal Reserve interest rates increase the borrowing costs for building massive launchpad infrastructure, while strict U.S. export controls limit the company from selling its advanced rocket engines to international buyers. Meanwhile, rising geopolitical tensions in Eastern Europe and Asia have forced the U.S. military to double its spending on secure satellite communications, directly boosting the company's government contract revenue. The massive shift towards satellite-based broadband internet is acting like a digital highway construction project, allowing the company to capture global market share before rivals can even build their first toll booths. Traditional aerospace competitors are struggling to match this pace because they rely on expensive, single-use rockets rather than reusable booster technology that slashes launch costs. Over the next 6 months, the successful orbital test of the company's next-generation heavy-lift rocket represents the biggest growth driver because it will instantly double their satellite deployment capacity. Conversely, the primary threat to this outlook is any unexpected regulatory delay by the Federal Aviation Administration, which could freeze scheduled launches and postpone critical commercial contract payouts. Today's top signal: SPCX's recent contract win lifts its momentum. Is Space Exploration Technologies Corporation a buy at current levels or a trap? Let's hear your thesis below. Remember, this is educational content, not personalized financial advice. Always conduct your own due diligence and understand that past performance is no guarantee of future results. Markets can shift rapidly, and any investment carries risk that you must assess independently. Subscribe now for deeper engineering insights on tomorrow's tech leaders today. If you want our full breakdown on Xanadu, the link is in the description. Stay sharp and see you next time.